This is our daily chart for the dollar index, and let me get this scrunched down here so you can get the full picture. All right, so we mentioned last weekend ahead of this balanced price range in here because we've had a lot of back and forth. Even though we have a sell side liquidity pool here, price hit this after hitting the volume imbalance, closing that in. We had a little bit of a retracement, which is reasonable. Here's our fair value gap, and institutional order flow entry drill tells us that we have to look for 97.37 as a minimum upside so we can see a continuation there. It doesn't need to fill that, okay? Preferably I'd like to see that stay open, okay? And if it does stay open, we could see hopefully an erosion moving lower here and eventually eat into this balanced price range and as a high resistance liquidity run. Okay, so this was a low resistance liquidity run for these equal lows. Now this is a high resistance liquidity run here. Now if we get below these lows, then this low here becomes a low resistance liquidity run because this is all inefficient price action and another volume imbalance. Okay, so below this low here, we have these lows over here as well, but that's pushing it out. Right now we got to see if this in fact does allow price to move lower. Okay, so the high came in today at exactly 97.37. This candle's high, 97.37 to the pip. Okay, so this weakness on the dollar, I'll talk about that in regards to the dollar CAD when we wrap up this video, but that'll hold this midweek's teaching. But we're looking for continuation. Hopefully tomorrow we'll get that ECB related Draghi's last speech. Apparently is slated for tomorrow, so we'll see what kind of jawboning he does for the euro. Anticipating upward movement on euro, which would be weakness on the dollar. Speaking of euro, we had very similar things just in mirror image. We had our fair value gap here and the low on this candle 111.14, so it needs to trade down to that low. Obviously you can see without having to do any reference like that, we went down to 111.05 and a half, so that's enough to capture a long and look for a continuation on the upside. Buy side liquidity pool resting above here, and then we would be looking to try to press into this buy side liquidity pool. And again, this is a balanced price range here, so this is going to be a high resistance liquidity run to get up here. We don't require it to trade all the way up to that point or up to here to get first profit. That's the main takeaway. It's problematic for a new student to hear me say this is a high resistance liquidity run. It just means that it's going to take some time and you have to be very patient. If we do trade above this high, it will most likely not be a direct run in here unless Draghi fuels it with whatever he says. Okay, so when Draghi says whatever he's going to say, the central banks will use that as a reason to reprice. Hopefully we'll see this run to that. Okay, if it trades lower, we'll be looking for this fair value gap to fill in. Okay, so all this buy side imbalance should rebalance if we give up today's low. Drop down into an hourly chart for euro. Okay, so we have a buy side liquidity pool resting here and a buy side liquidity pool resting right above this wick here. So it's really the equal highs that's got my attention, and then the bearish order block as well. Price has shown a willingness to want to rally, taking out sell side liquidity here, rallying, come back into an order block and expanding up. I'll drop into a 15-minute time frame. So you can see we had a fair value gap in here with an order block. Price trades back down into it, rallies away, another return to an order block, expansion. Now look at the fair value gap in here. We trade down to that and then the explosive run higher. Now this bearish order block, I I want to see it trade through this, especially through the mean threshold with speed. I want to see it trade through that aggressively and get north of these equal highs. And I don't want to see it just go up and then have any kind of rejection. Like, you don't want to see this type of reaction once it clears these highs. And I should say, if it trades above these highs, we don't want to see this type of action. We want to see it gun through it higher and expand, okay, and start to see price spooling, reaching up higher into that 111.80, 111.90, and then that would leave us a run tomorrow during ECB for a 112 big figure run, which would bring us another 40 pips if there's enough of a reason to do so. I'm not saying it's going to be 1240. I'm just saying that that's our normal protocol, okay? But we would be looking for, if we get the run up into 111.80s, 111.90, and ahead of ECB, I would expect ECB Draghi's talking to send it above 112 big figure. That's what I would anticipate, but obviously we have to see what price gives us ahead of that. We do have a little bit of an imbalance in here. If we do trade up to the bearish order block and then sell off, we could rebalance to this price point here, and bearish candle would be a bullish order block in this regard, and that could potentially send price higher. I'd like to see it leave this here personally. I don't think it needs to come all the way back down here and rebalance that. It looks like it's trying to price in a premium ahead of ECB tomorrow, so we'll see.